Hello, everyone. My name is Amanda Eberly-Boyer, Senior Director of Member Services at AVIXA, and welcome to our CARE Act webinar. This will be presented by Andrew Bigart and Meredith Boylan with Venable. Before I hand it over to Andrew and Meredith, there are a few housekeeping items I want to make sure we're aware of. One, the webinar will be approximately 45 to 60 minutes, and all attendees will be placed on mute. If you have questions during the presentation, please make sure you enter them into the Q&A window only so that today's moderators, Andrew and Meredith, can address them either throughout the presentation or at the end. To access the Q&A window, simply move your cursor at the bottom of your live stream video box to locate the Q&A icon and type away. The second thing is that you will have access to this recorded webinar at avixa.org within 5 to 7 business days. Again, if you have any questions, please make sure you utilize that Q&A box. And with that, I'm going to turn it over to the interesting part of the presentation and turn it over to Andrew and Meredith. Take it away.
Hi, everyone, and thank you for joining, and thank you for having us today. My name is Andrew Bigart. I'm a partner at Venable in the Financial Services Group, and I'm joined here today by my colleague Meredith Boylan, also a partner in the Financial Services Group, and Meredith is also co-head of our SBA task force that has been set up to help our clients think through how to address the CARES Act and take advantage of it to benefit their companies. It's a really interesting time for us to be presenting for you on this right now. It's not too often that you get to do a presentation where things are happening in real time, and that is certainly the case here. As many of you have probably known, the CARES Act created some new small business lending programs, which we're going to talk about in a lot of detail today. Those programs actually went live, at least the Paycheck Protection Program one went live on Friday, with applications being submitted to various different banks. And that is continuing today. So it is very much a live activity. We're right in the middle of it, and we'll do our very best during this presentation to teach you what we've learned and to try to get you best positioned to take advantage of relief if you qualify. One quick disclaimer, and this is not just the typical legal disclaimer that you might get from lawyers doing a presentation, but here, this is it's a very fluid situation where the statute that the CARES Act that created this new loan program was only passed about a week and a half or so ago. The government has moved extremely quickly to get this up and running in an effort to try to get money into small business hands. And as a result, the rules that the SBA and Treasury are developing continue to evolve for this program. And there's remain a number of different open issues where there really hasn't been clear guidance issued. So just want to highlight, and we'll do that throughout this presentation, that there's still a number of unanswered questions where we can't necessarily provide clear guidance in response to any specific questions. So what is the CARES Act? Let's start with the basics here. The CARES Act is the bill that was passed by Congress and signed into law by the President that provides financial relief to the American people and American businesses in response to the COVID-19 pandemic. It provides a lot of different relief, as I'm sure you've heard, in terms of direct financial aid to individual taxpayers, some specific loan assistance, for example, that goes to identified distressed industries like the airlines. But one of the big parts of it is to provide relief to small businesses, and that is done through Title I of the CARES Act, which provides $349 billion for small businesses through federally backed loans under a modified loan guarantee program that is run by the Small Business Administration. This particular program is called the Paycheck Protection Program, and we're going to spend most of our time talking about that today, as it's one of the main areas of relief that's being provided. But Title I also expands eligibility for borrowers applying for what are called economic injury disaster loans. And those are loan programs that have also been administered by the SBA in the past. As I mentioned, there's some other loan programs that are out there for larger businesses or for specific industries that have been viewed as being hit especially hard. Those are set forth in Title IV of the CARES Act. which sets aside $454 billion in programs for the Treasury and Federal Reserve to make loans to other identified business industries. Just to give you a little bit of background on what the Small Business Administration is that's really one of the drivers of these different programs. It's an independent federal government agency that provides assistance, including direct loans and loan guarantees to small businesses. Typically, they have loans that fall under their 7A program, and that's where this Paycheck Protection Program fits within the existing kind of 7A system, although modified in a number of ways. They also, as I mentioned, provide economic injury disaster loans and certain other types of loans called express loans. Finally, just to give you a little bit of additional information on some of the other relief that is available through the CARES Act. There's relief in the form of deferral of employee payroll taxes, where employers can delay the payment of employer share Social Security taxes that are otherwise owed. There's an employee retention credit, where the CARES Act creates refundable payroll tax credit for 50% of wages paid by employers to employees during the crisis. And then there's also expanded unemployment insurance. We're not going to focus on those today, but I would just note that if you're going to take advantage of some of these other programs that are out there, they may impact your availability, your qualification to get the PPP loans that we're going to talk about coming up now. So with that, why don't we go ahead and jump into the nuts and bolts of the Paycheck Protection Program. And with that, let me turn it over to my colleague Meredith to walk you through some of the basics here.
Good afternoon, everyone. Thank you for participating in this webinar with us. At a high level, the SBA Paycheck Protection Program is available to qualifying businesses, and we'll talk a little bit about that, to apply to SBA approved lenders, meaning typically banks, although some non-bank lenders are potentially eligible to become lenders under this program, for loans up to 2.5 times their average monthly payroll costs, up to $10 million. So you may have heard that there's $10 million loans available, but the reality is it's going to be a much more fact-intensive analysis to determine whether you can borrow up to that $10 million threshold. The loan proceeds may be used for payroll, rent, interest on mortgage, and other debt obligations. And this is one of those areas where it's important to note that there has been some developments in the last 4 days or 5 days as to how you can use the proceeds. The statute is much broader in its description of proceed use than the current guidance suggests, and we'll talk about this some more as well, but I just wanted to flag that right now, the way that the government is interpreting the use of these funds is that 75% of it has to be used for payroll costs. And then loan forgiveness is available for funds that are used for these payroll costs, rent, utilities, and interest on mortgages. But again, that is going to be subject to this 75% requirement that the funds be used for payroll costs. All payments, including interest, are going to be deferred for, I think right now the status is 6 months. It doesn't look like it's going to go longer than that. And no collateral or personal guarantee is required. So who qualifies for relief? If you are a small business as defined by the SBA's size standards, you are likely to qualify for relief. If you are a business with up to 500 employees, a business that meets the applicable size standards in the SBA's industry guides, you're likely to qualify for relief. If you're in the accommodation or food services industries, you have a more expanded eligibility for relief, meaning that you don't have to have just a minimum of 500 employees. You could actually have 500 employees over multiple sites. And 501c3 nonprofit organizations are eligible under the PPP program, whereas typically they may not be for an SBA loan. And there is a possibility that independent contractors and sole proprietors could qualify. And again, this area with respect to who qualifies for relief is under a lot of interpretive guidance at the moment as well. So this is one of those areas where you're going to want to check with your bank to see if your bank has specific requirements and how it's interpreting this, for example, the 500 employee headcount standard.
Yeah. Hey, Meredith,
Sure.
it's Andrew. I think just to provide a little more flavor on where some of the uncertainty comes here, when the program was first announced and released, there was really all this focus on businesses that have 500 or fewer employees. And some of the guidance and information that's been released by the government has continued to really focus on this 500 employee number. But the statute itself does reference being a small business concern under some of the standard SBA tests. And there's also some other support for that in some of the guidance that's been issued, but that's why there's a little bit of tension here between is it a new 500 person only test, or if you qualify for what would have traditionally been viewed as a small business, can you also qualify for this program? So, we have, I think what we think here is the best interpretation of everything, but there still continues to be a little bit of uncertainty around that.
And a related concept to the 500 person head count or the size eligibility is the concept of affiliation rules. And there's the next slide goes into those in a little bit more detail. These are rules where the SBA will typically look not just to the entity that is applying for some sort of SBA program, but also look to affiliates that have certain ownership and control along with that affiliate to determine how large the entity is. These include ownership percentage, control under stock options, securities, management control, control via franchise or license agreements. There are 3 instances under the CARES Act where these affiliation rules are waived. If you're a food service business with fewer than 500 employees or a hotel, if you're a franchise that has a franchise identifier code, or if you receive assistance, financial assistance from an SBIC, a Small Business Investment Act company, you may be eligible to dispense with those affiliation rules. How much relief is available? Well, we talked about that a few minutes ago. It's the lesser of $10 million, or the sum of 2.5 times the average total monthly payroll costs for the prior year. Now, note that on the current application that the SBA has released, it is looking for information for calendar year 2019. So this is another one of those areas where there's some distinctions between what the statute says and how this is being rolled out in practice. And it's another area where you're going to want to talk to your bank to see what metric they're using to measure payroll. What constitutes payroll? That's going to be your salaries, your wages, your commissions, your tips, your benefits paid, state and local taxes. And for a sole proprietor or an independent contractor, your wages, your commissions, your income, or your net earnings from self-employment capped at $100,000. I also want to mention that $100,000 cap as it affects more traditional payroll costs. There is an inconsistency between the way that the statute is written and the way that the application and guidance on this has been rolled out. The application suggests that $100,000 is a cap on all employee costs in total. So rather than just being a cap on salary, it would also be a $100,000 cap on the salary plus benefits and the whole package. I want to be clear that we're not reading this, and I don't think the government reads this as any sort of exclusion, that just because an employee makes over $100,000, you have to exclude that employee entirely from your payroll calculation. It's a cap. And then once oh, go ahead, Andrew.
Yeah, I was just going to say what, one of the things that I think Meredith mentioned at the beginning is that, for a lot of these open questions, it really will make sense for you to talk to your bank. The application form itself talks about, calculating your your average total monthly payroll for 2019. The SBA has released, interim regulations that provide some information on how to calculate payroll, but we've seen a number of banks actually kind of put together their own Excel spreadsheets that can be used to calculate payroll, and they're certainly going to have, their own views on how they want applicants to do that. So this is another area where not only is there some uncertainty based on the actual statute and guidance that's been issued, but then each bank may have their own methods to a certain extent for how they want you to calculate and document payroll.
The next slide is how must the relief be used? And again, as I highlighted when we first started our discussion, this is an evolving concept. The statute had given a lot of flexibility as to how the funds could be used. Of course, encouraging that they be used for payroll, but also giving some more leeway as to using them for rent, mortgage interest, utilities, and the like. As we discussed earlier, the guidance on this is tightening up, and it looks like the government, because they really want this money to flow to employees, is now requiring that 75% of the loan proceeds be used for payroll. So it's not just a matter of, how much are you going to get forgiven? It's actually, there's a use requirement. There are also certain categories that are just excluded. So even under the more liberal reading, you still could not use the money to compensate over $100,000 in compensation, to compensate employees with a principal place of residence outside of the United States, or for wages that are already, leave wages that are already covered by the Family First Coronavirus Response Act. Now I think Andrew's going to talk a bit about the loan forgiveness program.
Yeah, thank you. So this is just to give you a sense of how these issues have come up working with our clients. Really, the first week, a big part of what we were doing was trying to help clients figure out if they even qualified for relief. People trying to figure out if they fit within the different categories, and then what the process was for application. And that was really a big part of the focus. But I think what needs to be an equally important part of the focus too is to make sure you understand the loan forgiveness provisions and how they apply. Because while this program is designed and intended to provide for loan forgiveness, provided the funds are used for the eligible purposes, it's not guaranteed that loan forgiveness will happen. There are ways that loan forgiveness will not kick in. And so, making sure that you're thinking about those issues in addition to just whether or not you qualify is important, because I think you want to know up front when you apply, how likely it is and how much you think you'll be able to get forgiven on these loans. On the other hand, these are also relatively favorable loans in terms of the terms and conditions. So for many applicants, it may make sense to even apply for the loans if they know that they're not going to automatically, be able to get 100% loan forgiveness, because they're still relatively favorable loans. So I think just to recount at a high level what Meredith was explaining, the loan proceeds need to be used for certain eligible expenses: payroll, rent, utility payments, interest on mortgage payments. 75% of the amount forgiven has to be used to cover payroll costs. The other 25 can go to the other categories of eligible use. But it's important to understand that loan forgiveness can be reduced based on basically any reductions in full-time employees that you have during the 8-week period, as well as reductions in payroll. So let me walk you through those two different ones. First, reductions in full-time employees. So the amount of loan forgiveness can be reduced if the employer, the applicant, reduces the number of full-time equivalent employees in the 8-week period after they receive the loan when compared to one of two different periods that are used as like a baseline. So essentially, after 8 weeks, you've had your loan, you've used it to pay for payroll, et cetera. They're going to look at the number of full-time employees you have at the end of that 8-week period. And you can compare that to either the average number of full-time employees you had in January and February of 2020, or you can compare it to the average number of FTEs that you had from February 15, 2019 to June 30, 2019. So maybe that, to give you an example, let's say in January and February of this year, a company averaged 200 full-time employees. As a result of the economic hardship and maybe some layoffs that had to happen, when they apply for that loan, they have 100 employees. And at the end of their 8-week period of having taken out the loan, they have 100 employees. For loan forgiveness purposes, they're going to compare that 100 full-time employees that you have today against the average number that you had in January and February of 2020. And that's going to proportionally impact your loan forgiveness. Again, they do give you two different baseline time periods that you can use to compare your current full-time employees against, and I believe you can kind of pick whichever one is most favorable, but it is something to keep in mind if you are an entity that has already had some reductions in force as a result of what's going on here. In addition to reductions in full-time employees, there's also a formula in place for reductions in payroll. So you can lose loan forgiveness if the employer reduces the pay of any employee making less than $100,000 by more than 25% from the level of pay that was in the last complete calendar quarter. So if you do any broad salary cuts that are more than 25% across your employee base, that could impact your loan forgiveness. Finally, in terms of the loan forgiveness, you apply to your lender by submitting required documentation, and you're supposed to receive a decision within 60 days. Finally, the good news is that if you have concerns about being able to, having already had some layoffs or something like that, there is a provision that can allow you to earn back your loan forgiveness if you rehire people during the covered period that you have the loan. So if you're able to do that using the payroll funds that you're able to get through this loan to rehire people, that can help bring back some of any of the loan forgiveness that you might have otherwise lost by having a lower full-time employee count.
Andrew, can I just jump in for 1 minute? I just saw a question come in that ties to this. How do they know whether you're going to spend the funds on payroll? And the short answer is you're going to have to document it. The lender is going to be required to collect documentation that supports your request for forgiveness. And so you're going to have to show those payroll records. If you're seeking forgiveness of the mortgage interest or the rent or the utilities, you're going to have to show documents that validate the costs that you spent for those expenses as well. So if you are taking advantage of this PPP loan program, it's going to be important that you keep pretty meticulous records of how you're spending those funds. And even if you don't seek forgiveness, there is the potential for audit down the line. So it's still good hygiene to make sure that you're keeping careful track of how you're utilizing this money that's provided through the PPP program.
Yep. Good point. And we are, just for everybody's benefit, we are going to, if we can, we'll try to answer some questions in real time, just like Meredith did there. But we are seeing a number of questions coming in, and we'll try to address at least as many of them as we can at the end as well, since we're planning on leaving some time for Q&A. But yeah, thank you for that. That was a great place to address that question. So just want to highlight here for you some additional aspects of the loan program that you should be aware of. There is no personal guarantee that is required in order to apply and get one of these loans. There's no collateral that needs to be pledged. There's no credit elsewhere requirement, and by that we mean under typical SBA programs, sometimes you have to be able to demonstrate that you can't get credit elsewhere really in order to apply. That type of a requirement has been waived here. There's no need for you to be able to demonstrate that you can't get credit anywhere else. Assuming that there is not complete loan forgiveness, payments of principal, interest, and fees will be deferred for at least 6 months. The interest rates here are listed on the slide at 0.5%. It's actually 1%. And this was a change that Treasury made a few days ago, and it actually goes, now is a good time to answer a question that we did get from the audience, which is that they've heard that there has been some banks that have been hesitant to participate in this program, and whether or not the government was doing anything to try to encourage more banks to participate. And we think that the increase of the interest rate from 0.5% to 1% might have been done by Treasury to help some smaller banks that otherwise really from an economics perspective couldn't afford to participate, to make it a little bit more possible for them to help get involved in making loans as well. So there are steps that Treasury and SBA is taking to make changes. Just want to flag, though, that is an interest rate of 1%. It's a relatively recent change, and so the slides don't reflect quite the most up-to-date information there. There are no fees for borrowers that need to be paid in connection either to the SBA or to lenders. There's also no prepayment penalties in the event that you don't get complete loan forgiveness and you decide to go ahead and pay down the loan early. There's no penalties for that. And finally, there's no recourse against any borrower for non-payment of the loan, except where the borrower has used the loan proceeds for a non-allowable purpose or for fraud, something along those lines. So we've also gotten a number of questions from the audience about the application process. We'll walk through this slide kind of quickly, and then I think we can probably spend a few minutes just giving you some insight on what we've been hearing and seeing involved in this. So basically, borrowers can apply through any existing small business association lender or federally insured depository institution. So there are hundreds and hundreds of banks, and over 1,000 or more, I believe, that are already existing SBA lenders and have been doing SBA-related loans for many years. Presumably, all of those lenders are going to continue to participate in this program. There is an SBA website. Unfortunately, we don't have the link quite in here, but where you can get to find the SBA lenders. If you go to the SBA website, you should be able to find that. In terms of timing, small businesses and sole proprietorships can begin applying April 3. Independent contractors and self-employed can begin applying April 10. There is an application, and we're going to get to that in a minute. But I think that there's been a lot happening the past few days, and maybe we can give you a little bit of insight on exactly what's happening. So as of Friday, when the program opened up, there were a handful of banks that were able to take applications and have started to take them at a relatively good volume. But there were a number of other large banks that were waiting until today, basically, before they were able to get their programs up and running. And if you haven't been in touch with your bank yet, I think now is definitely the time to do it and to make contacts, figure out if your bank is participating in this program, what kind of documentation they might need from you, and really to start to get that going. One of the things we've been hearing about, and I think there's a question on this point too, is that a lot of banks are limiting their lending, at least initially, to customers that they already have a lending or similar relationship with. And that means that if you're typical, if you're just going to walk up to a new bank and try to see if you can get one of these loans, they may not be willing to do that right now. And I think that part of that is probably because of some of the separate obligations that they have from an anti-money laundering perspective to do good due diligence on new customers, make sure they are identifying their customers and know who they are. That all takes time. And so I think that a lot of banks are more comfortable being able to lend directly to their existing customers, and that's why some of them have put those types of limitations into place. Meredith, I don't know if you have any kind of general thoughts or learnings that you want to share that we've been getting from our clients with respect to kind of the bank relationship issues.
Yeah, I mean, it really is. If you have a pre-existing relationship with a bank, check their website. I think the banks are trying to update their policies and their approaches in real time as everything shifts. Even better, if you have a relationship manager at a bank, call that person. If you can get a human on the line, I think you're going to get some answers to a lot of these ambiguous questions and how an individual bank is handling it. But the one of the industry rumors that we're hearing is that they are favoring the smaller businesses, like the truly small businesses. So to those of you who are really smaller businesses, that may work in your favor. But again, this is all industry news that we're just trying to track in real time along with everybody else.
Yeah. So here we've got the sample form up on the screen. And this form's actually been changed already once. It was initially released mid last week and then was updated once more before the application process opened on Friday. Again, to one of the questions we got, I think that there was feedback that the Treasury Department and SBA received that they were able to at least address some of in this new application. If you haven't seen this application yet, it's this is the first page. There's really only one other second page, which has basically the signature spot and certain certifications that you have to make. We'll talk about that shortly, but the point being that it's really a two-page application. You can see that this is a pretty simple, at least on the surface, application, not asking for a lot of information. And I think while a lot of banks are probably using this application, we have heard that some banks are not necessarily using this application. Especially some of the larger banks have set up electronic portals that you can submit your application through. And some of them, they may require you to kind of enter in information directly into the portal as opposed to using this specific form. But I do think in most cases, even if a bank has tweaked the form at all, it has to essentially cover these same different topics, right? And so just to kind of walk you through, what does the application require? They're going to want you to identify what type of business that you are so that they can confirm that you meet, one of the qualifying criteria. They want the number of employees that you have, as we've been talking about. They ask you to calculate your average monthly payroll, explain, what use of the loan you're planning on doing, payroll, lease, utilities. I think our view is that, it probably makes sense to click on all of those if you think that that's how you're going to use the funds. If you've got payroll and a lease that you want to use and utilities, then it makes sense to mark those. But always just keep in mind that for loan forgiveness purposes, 75% of the proceeds have to be used for payroll. Next, they ask for applicant ownership, and this is going to go to any owners that have 20% or more equity of the applicant. So if you're a business and you've got investor companies in you that have 20% or more, you would have to list those here. Technically, I think the form requires that you just list the immediately above you investors that have 20% or more equity. But we have seen a number of clients, especially those that maybe have more complicated investor structures, to go ahead and provide information separately on their affiliated entities and applicants, just to make sure that they're being transparent and providing that information. Next, there's a series of questions asking about the applicant's prior history, including things like any prior criminal convictions, any prior exclusions from federal programs, different questions along those lines, which are really focused on the applicant, but in some cases they also are asking whether any of the owners have ever been involved in those types of disqualifying activities as well. And finally, if you get down to the very bottom, this is where they've actually made some changes. There's a question about, is the United States the principal place of residence for all employees of the applicant, including in the applicant's payroll calculation above? So Meredith, could you maybe provide a little bit of color and context around that particular question that they asked?
Sure. Just flag for me what number we're looking at, which question?
Yeah, question 7, the new question they added for the principal place of residence.
So that is, this kind of aligns with the discussion we had earlier about payroll and the limitation on paying people out who are not residents of the United States. I think this is also, it takes that to more of a corporate level to make sure that you're a US based company. It's not as restrictive as the earlier version of the application appeared to be, but you're going to have to be able to certify that all of the employees that you are using to formulate that payroll analysis to support your maximum loan amount are based here in the United States. Their principal place of residence is here in the United States. It doesn't mean that they can never travel overseas, or if there's some job that might take them overseas for a period of time, but that their principal place of residence is here in the U.S.
Yep. And then we don't have a copy of the next page here, but as I said, the next page just includes various different certifications. So basically, you'll need to certify that you qualify for this program as a small business that meets the different requirements. You have to have been in operation as a business on February 15, 2020, and making payments to employees. Okay, or to independent contractors. And then another one of the certifications we've gotten a number of questions about is that you have to certify that current economic uncertainty makes the loan request necessary to support the ongoing operations of the applicant. We've gotten a number of questions about that to say, well, what does it mean if I'm certifying that it's necessary for me to support ongoing operations? And there really isn't any specific guidance on that point. We've definitely heard, the view expressed that, given that we're all facing economic uncertainty here, that this test isn't saying that, you've already had to lay people off, but you would also kind of meet this test if you're expecting that you might have to lay people off if you don't get a loan. You may have to reduce salaries if you can't get the loan, or maybe you're going to have to change your operations and not, engage in certain activities that you typically would undergo as part of your operations. You'd have to curtail some of your typical activities. So if you're facing any of those kinds of challenges because of this economic uncertainty, it would seem that would be, you'd be qualifying under this particular certification. So with that, I think that probably covers most of the Paycheck Protection Program. I know that before we move on to the next topics and get to some of the other relief available, Meredith, any kind of concluding thoughts on the Paycheck Protection Program?
Sure, and I've seen a couple of questions come in, and I'm going to just do it here before we jump into the next topic, which is the availability of the PPP program to independent contractors. It is available to the independent contractor type of work organization. You'll see on the application that Andrew has up on the screen right now, independent contractor is one of the eligible entities. There's some separate rules around independent contractor payroll, understanding that it's not a perfect fit for your typical multi-employee type of organization. And that is going to look to wage, commission, income, net earnings from self-employment or similar compensation not an amount more than $100,000 in a year. And then with respect to how the PPP program applies to independent contractors, they're going to ask you to submit documentation as is necessary to establish that you're eligible, including payroll tax filings, 1099s, and income and expenses from your business. So the guidance hasn't been as robust and comprehensive around how this program is going to work for independent contractors, but it certainly is contemplated in the act itself that you will have the opportunity to take advantage of it. Now, as Andrew noted before, the application period is staggered, so I don't know that I think it's April 10th that is the kickoff date. Andrew can confirm if I'm wrong, but I would keep watching the Treasury website and the SBA website to see if there's any further developments around the program as it applies to independent contractors.
Yep. I think, we do have some other slides that we'll get to, but since we're kind of wrapping up some of the PPP discussion now, let's go ahead and we'll get through a couple of questions before we move on to some of the other slides. So there was one question asking kind of to differentiate between, full-time employees and part-time employees or temporary employees. So typically in terms of, on the one hand, counting the number of employees of your organization, Meredith, correct me if I'm wrong, but I believe you look at, full-time employees as well as part-time, and even I think temporary employees under existing SBA rules. Isn't that the guidance that we've basically seen?
Yes, that's correct.
Yeah. And then I think on the flip side of that, for the loan forgiveness aspect of this, as we mentioned earlier, they're going to look at the end of your loan period and compare how many full-time employees do you have versus how many did you have at one of the prior periods of time. And just note there, I think for part-time employees, you'd have to true them up to being FTEs to do that calculation. And so that's something to keep in mind on that as well. In terms of the types of payments that are included for monthly payroll, it would not include, to my knowledge, payments that are being made for rent. The figuring out your loan size is really focused on your payroll. There is a little bit of uncertainty around whether or not payments that are made to independent contractors fit within your payroll calculation. I think that a lot of our clients are taking the position that payments that they make to independent contractors are calculated within payroll, but that is a question that remains somewhat up in the air, I think.
Yeah, it's definitely not clear. And one of the, I know one of the tweets that Senator Rubio sent out this weekend involved trying to get some clarity around treatment of those independent contractor costs because there is so much confusion around it.
Yeah. Another question we got was if you have a relationship with multiple banks, should you apply to all of them? I think you need to be careful about not submitting multiple applications. If you have relationships with a number of banks, I would encourage you to reach out to all of them, figure out, which of them are participating, which of them seem in the best position to execute on this quickly. And once you identify that bank, move forward with that bank. But I would want, I think you need to be careful about not submitting multiple applications and having that be a problem for you. So just to flag that. Meredith, any other quick questions to answer, or should we move on to talking about some of the other relief?
I think we can move on.
Great. Okay. So I will turn it over to Meredith to kind of walk you through what some of the other relief options are from the SBA.
Sure. We're going to go through these pretty quickly, but I just want you to be aware that there are some other potential avenues. And again, if you go to the SBA website, they'll provide additional information on these different types of loans. One is called the Economic Injury Disaster Loan. Also, we call it an EIDL. Those are already, they have been up and running for a couple of weeks now, so you may have already heard of them. They have been expanded under the CARES Act, so some businesses that might not otherwise have qualified are now under the umbrella of EIDL. In this case, it is more of a traditional loan product with a 3.75 interest rate. I believe is still holding, and that is, it's not a loan that's going to get forgiven, although there is an exception to that, which I will talk about. But it's more of a traditional, loan up to $2 million to help you with these business-related expenses, but you will be expected to pay it back at, a regular interest rate. There's not a forgiveness component to it. However, you do not have to show, and this also applies with the PPP loan. Typically for SBA products, you have to demonstrate that you can't get credit elsewhere. That's not the rule now with these EIDL loans and with the PPP. You can go if you have the need and you qualify. You don't have to demonstrate that. But one key component of the EIDL that you may have heard about is that the CARES Act implemented a $10,000 grant, which is supposed to be awarded once you apply for the EIDL. You're supposed to receive a $10,000 grant that can be used for business type expenses. I don't think we have them all listed out, but you do not have to pay that grant back, even if the loan is not approved. However, I do believe you have to certify, or you will be expected to certify that you believe you are eligible for the loan. So it's not something you want to go and apply for just for the heck of it, because you want to get that $10,000 grant. You got to be a little bit careful there. Another product that is available is the Express Loan. And the Express Loan program has been expanded. Typically those loans are, a quick turnaround type of loan that you can get up to $350,000. They've expanded that to $1 million as part of the CARES Act. And again, the types of expenses that are contemplated for you to use under this loan are, business type expenses, including equipment, working capital, and the like. And then finally, we'll just touch on this because I don't know how applicable it is going to be to this audience, but there is another huge bucket of money that the government allocated in Title IV of the CARES Act, which relates, in large part to the airlines, to national security providers, but there is a $454 billion of unallocated funds right now. There's still no guidance as to how all of those funds are going to be set up for as far as lending programs go, but the Act does suggest that there will be funds available for medium-sized businesses, meaning 500 to 10,000 employee businesses under a mid-sized lending program. And there's also a bucket of money or a program that's going to be potentially set up through the Federal Reserve called Main Street Lending, which again, we have very little, really no information on what that will look like. But to the extent that your business doesn't qualify under the PPP program or one of the other loan programs, it's something to keep an eye on in the coming days, that there may be more clarity around these programs and whether they could provide relief for you. There is language, I just want to point it out, in Title IV as to whether you can get relief, say a PPP loan and also a loan through Title IV down the line. It's unclear. Title IV speaks to eligibility for those who have not received adequate economic relief elsewhere. And so it remains to be explained what adequate economic relief will count as, but that's just something I wanted to flag for you in the event that you get a PPP loan and want to try to seek more money down the line under Title IV.
Great. I think one other thing to highlight, our government affairs folks are monitoring what's happening on Capitol Hill pretty closely. There's already a lot of talk in the House, at least, that there's going to be another stimulus package put together, and initial, focus on that very well may be providing more funding for this PPP program. Maybe modifying it with any lessons learned, but certainly this seems to be the way that the government is looking to try to get funds into small businesses. So, in terms of next steps, definitely would encourage anybody that hasn't reached out to their bank to do so as soon as they can, and to submit an application as soon as they can. The initial chunk of money that was dedicated for this was $349 billion, and I think that nobody knows when that $349 billion is going to be tapped, but folks were thinking it could be as soon as the next few days. So this is not an area, if you think that you're going to qualify and you need one of these loans, it's best to move now, not to wait. And while you're reaching out to your bank, you might as well start preparing your payroll documentation and other things that you might need or that the bank might require as part of your application. Once you get the funds, in terms of practical next steps, be very careful about documenting how you're using the funds so that at the end of that 8-week period, you've got good documentation to demonstrate that you used it for, not just the eligible purposes, but that 75% went for payroll, for example. So that leaves us with a little bit of time to answer a few more questions. Meredith, I don't know if you've had a chance to scroll through, but I'll kick it off with one maybe while you look through for some questions to respond to.
Sure.
One of the questions that was asked was, we're a small business that started in January 2020 with only a handful of employees. Will we qualify? Yeah, so it sounds like an entity like that should qualify because you were in operation as of February 15, 2020, and you had employees that you were paying salaries. So that sounds like a textbook type of company that would be expected to be supported here. One of the other notes that we've been hearing from a lot of our clients and from kind of through the grapevine is that some banks are actually focusing their lending on smaller organizations. I believe Wells Fargo, which has already met its limit for lending, has issued a release saying that it was really focused on employers of 50 employees or less or fewer. So, that's just to give you a sense that some banks may be looking at, in particular, at the very small businesses to do some of this funding. Meredith, flip it to you to see if there's any thoughts you have.
One question about like if you get an EIDL grant, how does that work with the PPP? I believe, first of all, if you have an EIDL already and you apply for a PPP loan and receive it, you are not allowed to use the funds for the same purpose. So that's one important thing to note. However, if you do have an EIDL loan and you do get a PPP and you would receive that grant, my understanding is that the $10,000 $10,000 grant for the EIDL will be, it'll essentially reduce your forgiveness on the PPP by $10,000. But I'm a little rusty there, so that's something you're going to want to check with your bank as well.
I'll jump in while you maybe look at some of the other questions. So one of the questions was that what types of nonprofits can qualify for the PPP? So it really is limited to 501c3 entities. It does not include 501c6s, but it does include certain other veteran organizations and a few other, very, very small categories. But it really is primarily focused on 501c3s.
I see a question about not including federal payroll tax payments. Why would that be excluded? I'm not sure the policy reason behind that, but the statute does specifically allows state and local and does specifically exclude certain federal tax payments. So unfortunately, that's how it's written. And apparently whoever you're speaking with is trying to follow those rules.
I've got one. I'll jump in.
Sure.
Somebody asked whether or not the amount of their bank balance plays any role in the forgiveness of the loan. And so I assume that you could broaden that question out to be, does the company's financial resources or the amount of money in its bank, impact whether it can get loan forgiveness? I'm not aware of any requirement like that. Assuming you qualify for the loan and you get the loan and you use it for the required purposes as set forth, then you can earn loan forgiveness.
I saw a question asking, I think if you get a PPP loan, can you take advantage of the payroll tax credits? And neither Andrew nor I are tax lawyers, but my understanding is that if you receive a PPP loan, you're not eligible for the payroll tax credits that are available elsewhere in the CARES Act. And why don't we do one more question?
Sure. Go ahead.
Let's see. Somebody asked about we're an LLC and all members are not considered employees, so there are no payroll costs, but only member distributions. That's another one of those areas that there's a lot of ambiguity around. Again, Andrew and I aren't tax attorneys, but I think that the hiccup there comes with if you're not an employee, and it's questionable whether you can include a partnership distribution or member distribution as employee salary. So that's something that your bank may have views on as well.
Great. Well, I think that pretty much brings us to the end of the presentation. As we were saying, this is an area where a certain amount of money has been allocated. I think everybody's expecting that more money is going to be allocated to these programs, but once the $349 billion here for the Paycheck Protection Program runs out, we don't know how soon it will be until Congress appropriates more money. So if you are interested, but you decide that you're not going to apply at this time, definitely keep an eye on what's happening. And if more money is allocated in the future, then you should be in a good position to apply at that time based on what you've learned now and what you learn in the future. So with that, I would say thank you for allowing us to present today. And Meredith, any concluding thoughts?
No, thank you. We know this is a really hard time for all of you, and we really do wish you the best. And one other thing, just as a final end note, is we've heard that COVID-4 is being talked about right now, which may further expand the current CARES Act and also replenish some of the funding. So this has been a very bumpy process getting this particular bill off the ground and running. If it doesn't work out for you at this juncture, and we certainly hope it does, but just keep watching. There could be further, in addition to the Title IV funding, there could be additional CARES type PPP programs that are going to be rolled out with the next round of legislation. So maybe there'll be some lessons learned from this experience that will help make the next try at this program be a little less confusing.
Thank you so much, Andrew and Meredith. You provided a wealth of knowledge and information, so thank you so much for your time on that. Thank you all as participants who joined our webinar today on the CARES Act. This recording will be available on avixa.org within 5 to 7 business days. If you have any trouble, please do not hesitate to reach out to webinars@avixa.org. And again, just a huge thank you to Andrew and Meredith for helping us explore and better understand what is available to us through the CARES Act. We hope everyone has a great rest of your day. Everyone stays safe and stays healthy. And thank you all again so much. Have a good one.